Welcome to the WA Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. Jose Jafferji is responsible for acquisitions, business strategy and growth, risk management, and investor relations. His key focus is enhancing financial and operational performance to meet investment return targets using various strategies like short-term rentals and multifamily apartment buildings. On this episode, we talked about how he bought his first apartment building in 2019, which was a 14-unit building in Hamilton. He bought several other mid-size apartment buildings in Southern Ontario since then. And in 2021, he was looking to invest again, but he found that the numbers in Ontario just didn't work for him. So he started looking at syndicating and purchasing apartment buildings in the US. He went to a couple of different investor meetings in the States, and he found some partners there, and he talks about his story and how he was able to acquire some buildings in Atlanta, Georgia, and he bought in a few other cities in the US as well. So for anyone looking to go into apartment buildings and also potentially buy in the US, this is a great episode for you. I hope you'll enjoy. I would like to ask you to share this with somebody you know that is interested in investing in the US. Make sure to leave us a 5-star review as well. So your support's truly appreciated. I know you guys, some of you guys and girls have been listening for a long time. Thank you for your support throughout the years. And once again, just make sure to get the word out there and let's share this with somebody you know. Thank you and enjoy the episode. All right, I'm here with Jose for a second time. Thanks for joining me again. Last time I had you on was a couple of years ago. I don't even remember. It must have been like 2018, 2019, something like that.
Yeah, it's been, I would say 4 to 5 years.
Yeah. A lot's changed, I'm sure.
Yeah, for sure. And congrats to you continuing with the podcast. I know there's a lot of work involved.
Yeah, definitely. I appreciate it. I'm getting some help, which is good. But yeah, it is definitely a lot of work. So let's dive right in. Tell me a little bit about what's happened in the last couple of years. I know your strategies have changed. Maybe we can just kind of start off by talking about what your portfolio looked like, let's say in 2017, 2018, and what does it look like now?
Yeah, for sure. So 2017, I know 2018 is when we first got into multifamily. We bought our first apartment building. I think it was about 2019, I believe. I was actively looking at when we last spoke, I remember, and those good vibes kind of landed me a couple of deals. And so first large apartment building was a 14 unit. And then down the street, I bought another one like within 6 months, another similar size. Yeah, this was all in Hamilton. And we continued that momentum buying these mid-size multifamily apartment buildings in the areas that we were already familiar with. And at the time, we were buying them at we thought it was a decent price. So we were still thinking that we were overpaying, but hindsight now it's worked out really well.
Mm-hmm.
We implemented that same strategy that we were doing before, which was getting vacancy of the units, turning over those units. We would go with high quality condo finishes, adding in ensuite laundry in some cases if we had the space, and then enhancing the hallways and the common areas. Doing as best as a job as we can in terms of making the property stand out. And that worked out really well. We've so far refinanced to CMHC two buildings out of the few that we own.
Mm-hmm. Very cool. So just for anyone listening that maybe aspires to own a mid-sized apartment building, did you have to kind of sell off some of your smaller properties to do it, or were you, because you bought two within basically a year? So what was the strategy that allowed you to do that?
Yeah, good question. Actually, the first one that we got was the seller carried VTB, vendor take back, of around 600,000, and so that really helped us get into the market. I made a case to the seller that, I wrote a letter kind of explaining why this doesn't, numbers don't work. How can you do something about it? They were very firm on their price, so they wouldn't change their price. However, we were able to get that vendor take back at 5%.
Hmm.
So at the time it was, 5% was still considered high, but then we just actually discharged that mortgage last year.
Okay. Was this an off-market property or was it
Yeah,
on
it's
MLS?
off market, yes.
Yeah. Well, like this has been mentioned many times. I'm sure people have heard it, but it's a little bit easier to get a vendor take back on an off market when it's on the MLS, depending on the real estate agent, it might be a little more challenging sometimes, unless of course the agent deals with apartment buildings all the time, right?
Yeah, absolutely. I mean, we were very, very lucky to get that vendor take back, and such a pretty large amount, I would say. Um, it was a seller that was based out of Toronto. They only owned one apartment building. They didn't run it really well, so it was looked very tired, with the same existing tenants for 10 plus years. Um, no capex put into them, right? So they were kind of ready to get out and move on. And we made a proposition that worked for them, and they got their price at the time. So yeah, it worked out.
Yeah. Um, what was the purchase price, if you don't mind sharing,
Yeah, it was 2.3 million.
for 14 units? That's pretty good.
Yeah.
Well, I mean, you got a 600K. Was that a second position VTB or was that,
Yes,
yeah,
second. Yeah.
for 5%? Like that's ridiculously low.
Yeah.
I mean,
Yeah.
at the time, maybe it made more sense, but now that's pretty cheap. Um,
At the time, I know my first mortgage was around low fours, like it was a 4.5 or something like that, actually.
yeah.
Um, which I thought it was very high. So that's why, I made the argument that, hey, first position is already pretty high. Can you help us? I made this
Hmm.
deal um, come alive.
Yeah, yeah. And was that through like a major lender or was it private financing?
No, major. It was, I guess, a B lender.
Got it. Okay. And it took you a couple years, so you had to turn over some units, improve the building, increase rents, and you took it. I'm assuming that's one of the ones you took to CMHC.
Yeah, that's correct.
Yeah, awesome.
Um, yeah, we actually turned over every single unit except for one on that property. So really it was a challenge to get the vacancy that we wanted, but we finally we were able to do it over, I would a number of years, about a year and a half to 2 years into it.
Hmm. Yeah. Um, so you bought a couple buildings in Hamilton and possibly I'm not sure if other cities in Ontario as well, or did you just focus on? I think you said you
Yeah,
had one in Brantford as well, right?
yes. We have
Yeah.
one in Brantford, and also in Cambridge.
Okay.
Um,
How are you finding the ones in Brantford and Cambridge? Like dealing with the tenants, do you find that it's very different from the Hamilton tenant, or is it very similar? New tenants that you're finding, are they a lot of times relocating from Toronto, like that sort of thing?
Yeah, I would say a lot of them are relocating. We're getting a lot of like younger families, or sometimes newer immigrants, and they've worked out really well because, they're um, coming here to this country to get a better life for themselves. So they tend to be better quality in terms of giving us less headaches. Um, so we've kind of in Cambridge, we've niched out into like a lot of our building. I would say, well, more than one third is like Ukrainians.
Hmm.
Um, so yeah, and then we get it. We asked. We get referrals from our existing ones if they're happy, and they'll bring in their friends or family members to stay in that same apartment building. kind of build
Now,
that community.
when you um, are filling the units with like these, let's say new immigrants, they generally won't have established credit and that sort of thing. So how do you make sure that you're finding the right person and not, putting yourself at risk of having a non-paying tenant or that sort of thing?
Yeah, so I mean, I don't get too involved in the screening process, but my that's my wife's department.
Mm-hmm.
Um, but I believe that they do have some work history, so we were mostly looking at their employment, putting more emphasis on their employment, and a lot of times they're dual income earners. They so we kind of the credit is not necessarily the big issue for us,
Mm-hmm.
uh, as long as they have good employment.
Right. Okay. So yeah, you got a couple buildings here in, like, let's say the Golden Horseshoe, Southern Ontario. And I know that in the past couple years, you started exploring opportunities outside of Ontario. So why don't you tell us a little bit about that?
Yeah, sure thing. So I would say in the last 2.5 to years or so, um, we were looking to buy another property, another apartment building, because we had great success with our existing ones. Um, and we just couldn't make the numbers work. Uh, you know, Obviously COVID kind of accelerated that aspect as well because everything was being traded for, like over $200,000 a unit as a minimum. So it was hard for us to make the numbers work. And we were very specific in the areas that we wanted to buy. We weren't willing to go like more than an hour and a half away because we have the way we operate, we have an in-house property management. So we want to make sure that our property management our team can handle some of these other areas. So that's why we stuck with our buy box, being very specific. So sooner, I started looking, hey, what's the next area to look at? And I kind of found that the US makes a lot more sense. I started attending a lot of conferences. And one thing that kept popping up is like the syndication model, which is basically pooling investor capital and buying larger multifamily apartments complexes. So that's what I pursued. It took me more than a year to kind of get a team together, find partners, find an area that I was comfortable with, and then we bought our first apartment complex in as a syndication in end of 2022.
Okay.
Actually, sorry, end of 2021. Yes.
2021. Okay. So when you say, like, you're talking about a syndication, are you talking about having like 10 plus people involved, or would it be smaller than that, would you say?
No, there's a lot more investors involved because of the size of the property. There's, uh, it's syndication is typically an LPGP model.
Mm-hmm.
So we have general partners, and then we have a bunch of limited partner investors, smaller investors.
Can you give us an idea of how many investors would typically be involved in a project like that?
It's like around 35 to 40 investors
Mm-hmm.
would be involved, and they're putting in, I would say we had a minimum of 75,000 um uh US dollars.
Mm-hmm.
So that would be, several of those.
Yeah. And are a lot of these LPs Canadians, or you're getting US LPs, limited
We
partners?
had a mixture of both. So we brought in Canadians as well into the deal, and we had a bunch of US investors as
Mm-hmm.
well. Um, and just not just to my network, but I had our other general partner brought in their own network into getting this deal done.
Okay. And your general partner, like the other person involved, are they local as well, like Ontario, or they're from the US?
So one of my other partners is a Canadian, and then I have another partner that is an American.
Okay, that's interesting. So you have multiple GPs or general partners,
Yes.
and everyone brings something to the table. Um, you're able to raise funds from Canadians and Americans,
Yep.
and you're targeting like what kind of buildings are you going after? How big? What sort of price point?
So typically in a syndication model, you want to stick to like around at least 100 units plus.
Hmm.
Um, just because it brings that economies of scale. You can get a on-site property manager. So that's we typically there's an on-site office
Hmm.
which has a maintenance person and a leasing person and a manager overlooking them.
Yep.
So it kind of brings so that's kind of already rolled into your pro forma that you are going to have these employees in place. So we hire third-party property manager, but we do the asset management.
Hmm. Okay. 100 plus units. And what would be like a typical price per door on a project? Or I mean, it depends on the market, right? But um,
Yes.
these are we kind of touched on this before, but you were looking at North Carolina, Florida, Kentucky, Atlanta, Georgia. Where was that? Like the first one, which city did you
That
invest in?
that that- so the both the properties are in North Carolina or sorry in Atlanta market. One is in Metro Atlanta, and then the other one we have is kind of a suburb of Atlanta.
Hmm.
So far we've been involved in two syndications, and the other properties that we bought were we in North Carolina and Florida. We implemented a different strategy, so
Okay.
they're not multifamily, they're short-term rentals.
Okay. Okay. Um, how does like if someone wanted to do what you're doing, let's just say they're listening and they want to start doing syndications and buying stuff in Atlanta, how would they go about finding the right person to partner with to work with?
It's a lot of networking. So during COVID and even post-COVID when the travel kind of opened up, I used to go to a lot of multifamily and capital raising events down in the US,
Hmm.
which allowed me to network with a lot of people, and they're all there for the same purpose. They're trying to network, build teams, build a network, and so you're looking for to build a GP team,
Yeah.
right? A general partner team,
Yeah.
which will bring, you know, so one of my partners and I, um, we were involved in many different aspects. So we brought in some of the capital, but we also partnered with other people that brought in the capital. We did the acquisition and the underwriting. Um, but mostly for the capital aspects, you need a solid GP team that can bring in that in those investors into
Hmm.
the project.
Yeah. Are there any particular groups that you would recommend again for anyone listening that's interested in going to the US for a multi-unit conference or something like that?
Yeah, one of the biggest ones is it's called Best Ever Conference.
The best ever
Um,
conference?
yeah,
Okay.
and it's run by a guy named Joe Fairless. He's also got a book about apartment syndication.
Okay.
Um, that's that these kinds of conferences you have typically like 1,000 to 1,500 people, and you're just meeting a lot of people and then connecting with them later on, setting
Hmm.
up calls and see if they're a good fit for what you're trying to do.
Yeah.
Because every one of them will be on a kind of a different, will have different strengths, but also will be on a different level, right? So some might be beginners, some might be a little bit more intermediary, and some are advanced where they already have an established team in place.
Yeah. I find just from my personal experience, I've never been to a US event, but like local events, I find that a lot of the people that go to those events are looking to raise capital. Um, do you find that that's the case as well on your end? And like, if you are looking for a GP, um, if you're looking to raise capital yourself, how does that all work out? Like, are you looking for someone that already has access to a lot of capital, or what's, in your opinion, what's the best way to get everybody to work together?
Yeah, so when I go and network at these events, I'm not necessarily looking for capital for myself.
Mm-hmm.
It's more so people, I want to connect with people that have access to capital. So
Yeah.
for example, a lot of healthcare professionals, for doctors, dentists, optometrists, pharmacists, they do attend these conferences as well because they want to become passive investors, active and passive investors. So they will bring in they want to be part of a GP team.
Mm-hmm.
So they have access to a good network with high net worth individuals that they can bring into a project and then be part of the team, right?
Right.
So I'm not necessarily looking for somebody that will invest with me, but more so those key players that have a network of their own
Mm-hmm.
are already connected to a large healthcare their own profession,
Yeah.
and that will bring in that capital. So
Well,
it's
that's
those are the players you're looking for.
Yeah, that's the nice thing. Sometimes you just meet one person and they might open many doors for you, right? As
Absolutely.
long as like you have good intentions, you're not like I've been to events where somebody just like comes up to you, they don't know you, nothing, they just give you a card or tell you what they want and they walk away. It's like, they're just trying to
Yes.
spam the room and see what happens, but I don't think that's a very effective way of doing things.
Yeah, and like you said, there's like we have I'll give you a case of this one person that owned a tech company that
Hmm.
we connected with, and later on we were this guy's based out of Dallas. We connected with him, we had lunch with him, and we, next thing you know, he kind of showed us his we met his at his place. He has a pretty large tech company, makes a lot of great money, and he's also connected to his community and runs an association of other tech professionals.
Yeah.
So for him, raising money was like not an issue at all,
Hmm.
He can raise several million dollars for one project.
Yeah. Yeah. That's cool. Um, let's talk a little bit about Atlanta as a market. First of all, I'm assuming that you were investing there. I'm guessing that it's a landlord friendly state. Is that right?
Yes.
Or sorry, not state, city, Georgia. Um, so yeah, it's landlord friendly. What's the game plan when you go in there? Are you trying to get like market rent right away? There probably is no rent control, I would think.
Yeah, yeah. Definitely you don't want to invest in a city or state where there is rent control.
Hmm.
So the whole purpose of me trying to get out of the Ontario market was I wanted to have a more landlord-friendly state.
Yeah.
Um, I wanted to have more reasonably priced state as well, but also not as too small of a town, decent sized metro. So that kind of fit all the boxes. We weren't we were looking in several different areas at once, kind of more so in Texas. We were focusing at the beginning,
Hmm.
but at the time, you know, about 2.5 years ago, it was very competitive.
Yeah.
So
Yeah.
the Dallas and was like that was our number one market that we were looking in first. It was just way too competitive. So we then started looking at other markets, bigger markets, but a little bit less competitive. So we had,
Mhm.
this deal came along, and that's how we established buying and made several trips. Kind of got a feel for the market and jumped into that Atlanta market.
And when you were visiting there, kind of in the early stages, were you going with your other GPs as well? Were you all coordinating together?
Yeah, it was just me, myself, and my other partner, other GP. So we were the ones that are kind of making building relationship with brokers. Um, we would go meet with every time we go, we would meet with like at least three different brokers
Hmm.
and ask them, hey, what do you have any deals in the pipeline coming up that would fit our criteria? You know.
Right. So where are
So
you at now with these projects, like the two in the Atlanta area? Is it going to be a couple years before you're able to reposition the building? Do you plan on refinancing it or selling it?
yeah, so obviously with the way the rate hikes went on last year, it was kind of an unprecedented increase. So right now we are not in a play, we're not stabilized just yet. I would say another year or so is what we need.
Hmm.
So there we're experiencing some challenges like every other multifamily operator right now with the rate hikes and in certain areas you do have an issue with certain counties are slow at evictions. Not as bad as over here, but still getting a little bit lagged behind.
Hmm.
Typically, in certain states you would have like two months for evictions.
Hmm.
Ours is taking more like 6 months.
Really? Wow, that's pretty slow. But
Yeah.
is that like start to finish? Like you file the paperwork and then within 6 months of that date you get the eviction? Because here it might be 6 months before you get a hearing date, and then it could be another month or two before the sheriff gets involved, or longer.
Yeah, it has improved to roughly about 6 months end to end.
Hmm.
But yeah, that was that hurt us a little bit because of in terms of our cash flow. Um, Also, we were experiencing just like over here, very, very high rent growth, which
Hmm.
was obviously us unsustainable. So which that rent increase has slowed down now. Still pretty decent, but um, when you have a larger apartment complex, you're dealing with, you're not going to necessarily have 100% occupancy.
Hmm.
You're not going to be in the, you want to be in the 90 plus range. But the most important thing is not just your physical occupancy, but your economic occupancy, meaning that how many people are actually paying you rent on time
Right.
out of that 90%. So that's what we is a challenge where we face that and try to stabilize that as much as possible um, with being proactive.
What does that look like for you with these two buildings? Do you have a pretty good, we'll call it economic occupancy?
Economic has definitely suffered in the last 12 months. Um, but we made some significant changes in terms of on-site staff. So your property manager is a very, very key role, but having your on-site team can make or break the deal.
Hmm.
So we've made some staff changes and it's starting to improve now, so I think by the end of the year we should be able to get to close to 90%
So
economic.
what kind of changes are you talking about? Like, is it just following up with people who are behind on rent, that sort of thing, or is
Yeah,
it filing
exactly.
paperwork right away, eviction
It's more so
paperwork?
just like following up on collections. You got to be proactive in terms of we do file on time in terms of the legal paperwork, but
Hmm.
more so before we were giving what's called promise to pay notices, which is basically by the end of the month they're gonna pay.
Hmm.
But now we're kind of implementing more of a stricter
Yeah.
policy where they're gonna get filed on.
Right.
So every state law is a little bit different. But for example, in Atlanta, you cannot, once you file on somebody, you cannot collect.
Oh, interesting.
Um,
So you're when you say file on someone, you mean file for an eviction?
yeah.
Yeah. Okay. So it's one or the other. It's either you collect the rent, but what if they say they're gonna pay and then goes a couple months, then you'd have no choice but to file for an eviction at that point and lose any amount that they owe you.
Yes.
Yeah. I mean, that's kind of the case and a lot of times anyway. Like if in Ontario, let's say a tenant doesn't pay rent for 6 months, the chances are they already spent the money on something else. So you're probably not going to be able to collect that money
Yeah,
anyway.
yeah, that's right.
Yeah.
After like 2 months, there's no chance of recovery
Hmm.
anyways, right? So
Yeah.
that's why we had those promise to pay kind of strategy. But we implemented a lot of the similar things that you would over here. For example, we were doing cash for keys for non-paying tenants because we
Hmm.
didn't want to go through the long eviction process. Um, and then we would also do like balance, what's called balance forgiveness. So if they owe us, let's say $3,000, we would forgive that balance as
Yep.
long as they had hand in the keys, you know?
Right, right. Yeah. Um, were you expecting, like, were you aware before you got into that market that the eviction process was that far behind, or was it something you figured out kind of as it happened?
No, it wasn't as bad before. It just, I would say in the last 12 to 18 months is when it started getting worse and worse.
Hmm.
Um, I guess because mainly because of inflation, was having impact on, you know, these are paycheck to paycheck type of tenants.
Yeah, yeah.
So they were falling behind, and that's why the the courts got backed up.
Right. I guess if you had credit card debt, I'm not sure. I'm just making an assumption here, but
Yeah.
if you had some credit card debt and then all of a sudden the rates start going up, I'm not sure if like the rates would impact the credit card rate, but then you might see people are going to be or in more trouble or if they have a line of credit or whatever.
Yeah, I mean, several factors. I mean, you're dealing with like a typically blue collar worker or our demographic was, somebody that's working retail or a factory job.
Hmm.
Um, so depending on their situation changes, they typically are 1 month away from like
Yeah.
financial ruin. So,
Sure, sure.
you know,
Well, a lot of people live that way. I remember seeing a stat a few years ago at a real estate conference that a lot of people are, if they miss one paycheck, they're going to be in pretty deep trouble. So, it makes sense that that would happen given the state of the economy and the downturn that we're experiencing and that sort of thing.
yeah,
Um,
definitely. Um,
maybe we can just kind of quickly touch on North Carolina and Florida. So
yeah.
you said that you're doing short-term rentals in those two areas. Is that right?
Yeah, so short-term rentals is something that we explored, um, I would say about 12, 18 months ago.
Okay.
Brand new to us. But what happened was I completed a new build construction, like built two duplexes in Hamilton over
Hmm.
here. And instead of us kind of going the traditional route of doing long-term rentals, we did short-term rentals on those.
That was your first
So
short-term
that was
rental.
our first kind of our first dive into short-term rentals.
Yep.
Um, and we started liking that process of having short-term rentals. Obviously, the net cash flow is much better. Um, and these were brand new properties that we had recently built with basement apartments. So we rented those 4 units to short-term rental. Um, and we know our original thought process was short-term rental is going to create a lot more damage to the property.
Hmm.
You have multiple people moving in and out. But when we were actually operating those properties, it was the opposite. Every time, every couple of days, the property would get cleaned. Uh, in every all these, we started learning about these processes, about technology, pricing strategy, like revenue management. software that can help you with the property management. And we also started hiring like virtual staff.
Mm-hmm.
And we thought, hey, let's do this. Let's start buying more of these
Mm-hmm.
because it's with a high rate, interest rate environment. This still makes sense because you got really good cash flow.
Mm-hmm.
So when we explored the cottage country market, the pricing didn't make sense to us.
Yeah.
And that's kind of led us to, hey, we already know the US market. Let's start exploring these markets.
Mm-hmm.
So
Mm-hmm.
we started doing our research, and our first property was in North Carolina. That was like it's literally this half the price that you would pay in cottage country. We bought a place in the North Carolina mountains, um, and it's worked out really well. So we ended up buying more and more of those,
Yeah. Yeah.
just because of the higher cash flow strategy.
Okay. So just out of curiosity, like what were you striving for as an investor? Did you have a certain cash flow goal? Do you just want like a certain net worth? What is it that you're targeting?
Yeah, the for short-term rentals, our main focus was just to higher cash flow.
Mm-hmm.
Because with the higher debt, with the higher rates, we wanted to make sure we're still cash flow positive. But I mean, with short-term rentals, you're way cash flow positive. It's amazing that the cash on cash return that you can generate.
Yeah. Yeah.
And I mean, we also we made, did our research. We were buying very thoughtfully, by doing our analysis like on the software like AirDNA.
Mm-hmm.
And that allowed us to maximize the cash flow. We learned about revenue management and seasonality,
Yeah.
learned about operations, and that's why we started to expand into buying more and more of those.
Got it. Got it. Cool. Sounds like you're doing really well. Like you still have a nice portfolio in Ontario. You've got a couple different things going on in different states in the US. Sounds like you have a good team. Is there
Yep, but it's
anything? Sorry, go on.
always a struggle, to find the good quality people and operations part. But yeah, it's been a fun ride. We really enjoy the short-term rental aspect.
Mm-hmm.
Um, just because I used to do a lot of flips back when we last spoke as well,
Yep. Yep.
and it's kind of we love to see the transformation,
Mm-hmm. Yeah. Was there anything you feel like we missed discussing? Anything else you'd want to share?
Um, yeah, you know what? I just recently read this report, and which was very interesting to me. And it kind of broke down all the different sectors in real estate over the last since 2019 to now. Um, from a global perspective, but then he had a North America, not specifically Canada or US, but all of North America. And uh, guess what's the number one sector um, that is with the highest returns right now?
I'm gonna guess industrial.
Close actually. It's number one right now is data centers, but number two is hospitality.
Okay. I just said industrial because that was one of the points we said we would discuss before we started recording.
Yeah, yeah. No, and industrial is number three.
Okay.
So
Yeah.
we kind of delved into the hospitality sector with the short-term rental side. So
Yep.
I mean, we're glad that we're in that, and our goal is to maybe buy a boutique hotel in the future, and
Mm-hmm.
definitely look into industrial as well. After doing a couple of short-term rental deals, we were thinking about, hey, how can we scale the same asset class, right?
Mm-hmm.
So we started looking into boutique hotels. Um, we've been analyzing a few different ones, but haven't landed a deal yet.
Yeah.
So we're with the boutique hotels, we're very specific in our criteria, just like everything else. But it has to be fit our buy box. And we're not looking for something that big either, because it won't have that boutique feel to it. Um, and most likely, yeah, like we're concentrating more so in our same market in North Carolina.
Hmm. Have you, I don't know if you've ever spoken to Victoria from the Breeze Motel.
No.
So yeah, so she opened I guess you can call it like a boutique hotel style of thing. And I think it's Nova Scotia, Victoria Clooney. So you
Okay.
might, I don't know if you want to connect with her and ask her how that's going. It might be a good connection for you. She was on the podcast a few months ago as well. So I can send you the information on that. But
Sure.
yeah, that always seems interesting. I did watch a thing on Netflix with my wife last year about somebody who converted like a hotel, and it seems like a pretty interesting project. So that's great. Was that I know you had touched a little bit on wanting to explore industrial options as well in Ontario. Is that what is it that you were
Yeah,
referring to?
industry. I mean, we our first choice would have been in Ontario. But honestly, for us, what we're finding with the Ontario market is land prices are just way too high.
Yeah.
You're just paying such a premium um that and most likely, and this goes for any kind of asset class, whether you're buying multifamily or industrial, the value is just too high to
Hmm.
begin with.
Yeah.
And as a if as a business that you're operating, it just doesn't make sense to pay such a high price for very, very low returns.
Right.
As in a long run, maybe for some people they might be okay with it because of the stability in our market, our cap rates being so low. But for us, we're still looking for a good cash on cash return
Hmm.
and decent appreciation or growth in the equity growth.
Yeah. Yeah. That's awesome. You guys are doing great. Um, so we talked a lot about a lot of your different projects and strategies and this and that. So I hope that there was some good value for the people that are listening. To finish things off, do you want to share how people can reach you and any type of services that you're providing?
Yeah, so best way is to reach me on Instagram. My handle is Jose Jafferji. It's my first and last name. You can also feel free to check out my website. It's savvyrealestate.ca.
Mhm. Awesome. Thank you, Jose. I appreciate your time and I look forward to hearing about your projects again in the future.
All right, thanks for having me.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.